All right. Hi, everyone. My name is Brian Lee. I am a business development representative here with BizRing. Um, I am joined by two speakers today. One is Akhilan Deva, CEO and founder of BizRing.com, a real estate digital marketing platform connecting real estate service providers with investors. And I am also joined by Mathieu Laquerre, founder and VP at Mata Partners, a private equity lending real estate investments firm here in Toronto, operating in the US as well. Welcome and welcome to this discussion.
Thanks for having me on, guys.
Great to hear you from Matthew. And actually, he's operating in Ottawa and he is expanding into Toronto. At the same time, he's mainly investing in US. Right, Matthew?
Exactly. Well, we'd like to start working with more investors out of Toronto for sure.
Yeah.
Right. So, just to kick off this discussion, today we'll be talking about why Canadians might want to invest in the US. So, Akilan, you can go ahead and ask Matthew the first question of this discussion today.
Thanks, Brian. So, Matt, I know you are successfully doing great things in US and getting good return on investment. And we want our followers and learners to learn from your lessons and mistakes you have done in US and the greater opportunities out there. So first, I would like to ask you about why do you think people have to invest in US compared to the return on investment in Canada? Are you seeing better ROI in US?
Well, I think the thing is right now there's been such a huge market shift, especially in Canadian real estate, that things are costing a lot more, and we specialize in new development, and you can do a lot of great things with less money in the US and have the same amount of the same returns in Canada, or if not better in the US with less money. I think that's the biggest thing to look at is how much capital can you deploy.
I see. So what you're saying is with less capital, you can achieve similar or better than what you would achieve here in Canada.
Correct, yeah.
Okay. So, as Canadians, we get mortgage here in Canada with 20% down payment. What about in US? As Canadian, are we able to get mortgage?
So it all depends what kind of real estate you're investing in, right? So we're doing a lot of commercial property. So what we've done is we partnered with a US developer that will sign on the note, guarantee the note for us. Uh, so we have to put less money down versus if you're a foreigner, on average, depending, even if it's a single family home to multi-unit, you're between 25 to 40% um, down as a foreigner if you don't have a US partner, and it depends on your structure also. So there's a lot of variables, but um, our business model essentially is we have a developer that we've partnered with, and we're using his credit, his bank contact uh, to get us the mortgage properties.
So, Matt, to understand it clearly, so they would go on the title and get the mortgage approved, right?
Correct.
Okay.
So the
And
one, so it depends. Yes and no. You are using corporations, so it's a guarantor half the time on our development projects. Some are recourse, some are non-recourse loans, but we have a tendency using more guarantors than anything else than recording somebody on the property.
mhm. And also, if you don't have a partner, then if you put higher down payment, you would be able to get rest as mortgage.
100%. So I'm working on a new little project in Florida. So and I'm just trying to finalize it with a few lenders, but to get non-recourse loans for Canadians on single family short-term properties or 4 units and lower at around a 25% down.
Okay, so if Canadians put 25% as down payment and 75% can be financed.
Exactly. We're just fine. We're just working it out right now. So we're hoping we can qualify Canadians at 25. You know, the lending conditions have changed with the interest rate rising in the U.S. and Canada. So we're negotiating. We're trying to stick it around 25. It might go to 30, but our goal is to have a project going for around 25%.
That's great. And my other question is, would you be able to get multiplex units in US for better than 10% cap rate?
So it all depends of your strategy and what you're going after. I have friends that are that are getting the cap rates, but the 10% cap rates, but they're older buildings, a little bit more tired, a little bit more renovation works or work that needs to be done on it. My strategy is a little bit different. We're not hitting the cap rates, but we're building from the ground up, and our average cap rates between 5.5%, 6%, if we're lucky. After we've done a refinance, pulled the majority, if not all, the capital out of the deals.
Oh, I see. So you are not buying properties for cap rate, you are buying for demolition and rebuilding it from the ground up?
Exactly. That's our strategy on that. We've been exploring, buying a distressed asset and repositioning it, but at the end of the day, I'm always a big fan of ground up new construction because you can control what's behind the wall. For the first 10 years of operation, your expenses are lower. So there's a lot of variables that we look at, but eventually we want to move into that space. But we haven't done a full transition to start doing those types of projects yet.
Mm-hmm. Okay. And what would be the property management companies management fees in US?
So that's a tough one because it's all over the place. So your average between 8 and 10% for residential. We do a lot of volume, so we have a property management company that's offering their services at 5%, but we're building quite a bit of units, and they're even though they're smaller multifamily projects, they're all within uh, a neighborhood, so we're able to get a little bit lower than your average 8 to 10%. If you go in the short term rental in the U.S., you're anywhere between 25 and 30% for property management
Wow. For short-term rentals, they charge 25%.
to 30%.
Mm-hmm. That is because it's a lot of turn and churning, right? So they are charging, and I think that's good for them to get a lot of revenue out of it, right?
Yeah,
Not putting any capital, and they could get 25% of their revenue. That's a great deal for them.
yeah.
Yeah. And so let's say Canadians who have already have some investment here in Canada and now exploring to invest in US, what would be your advice which they should not do? Probably three should not do and three they should do.
So I would say the first thing is make sure we always talk about a team, but I would say the first thing to invest in is to find a good account that understands Canadian taxes and understands American taxes. I see a lot of Canadians, buying properties directly into an LLC. Americans love their LLCs. They're flow through entities. In Canada, they're not recognized the same way, so you got your double taxation. So spend the money, have a consultation with a cross border specialist. That's one of my first steps. I always tell people. And my second step would be start by picking one market for the first year or two, because the U.S. It's I find the real estate changes a lot quicker than what we're used to in Canada. So pick one market, build yourself your team, and go from there for your first 12 to 24 months when you're operating in the U.S.
So understanding the neighborhood and building the power team is crucially important in that particular market, huh?
100%.
Yeah. So what would be a couple of failures or the issues you must have been through, and where a new investor who is trying to get into US could prevent?
Well, I think I could talk by experience. Like when
Yeah.
I first started in the US, I was fairly active in Canada. And I'm like, oh, you know what? Let me try one property. My mentor's like, oh, Matt, you should try the US. I tried one property, but I didn't spend the time, the energy to really understand the US tax structure. And, that mistake that took me almost 2.5, 3 years to get out of. But now, moving forward, we always have our accountant review all of our corporate structures when we're investing in the US. I always recommend having a great structure for taxation in the US. And also, you got to understand that being a foreigner dealing in another country, that things don't happen as quickly for us. For bank financing, the terms might not be the greatest terms sometimes. So make sure you take the time to research a good lender, just because you can have some shock surprises right before closing. The interest rates can go up, more money required, and so forth.
Mhm. Have you explored the properties on auctions, or even they call it tax liens, I guess, right, in US?
So I'm not part of. I don't do a lot of acquisitions in our team. We are my partner take care of that. I'm just in the midst of looking at a new market that we're exploring. So we're looking at tax liens. Um, but I'm to be honest with you, I don't have that much experience that we're just starting to look at stuff like that.
Oh, I see. Okay. Um, okay. So, out of the cities where you have invested, so what are the first two picks from your list in US?
So look, we've been invested in Philadelphia for 7 years now. We are looking to go a little bit more down towards the Sun Belt, so Florida. We're looked a little bit at Texas, but I think our next move probably Florida. One of our partners that one of our managing partners company just moved to Florida last August, so I think that's going to be our next move for sure. And another thing too that I like to talk to Canadians is, in the U.S. there's all these tax incentives too when you're investing in U.S. real estate. So make sure you look out at the tax incentive on the municipal level and on the federal side. So sometimes you get tax abatement. Also have what they call opportunity zones. So those are things that they help you out to get better results and better returns at the end of the day.
Oh, I see. Okay. So, unlike Canada, the support comes from the federal level, state level, and municipality level
Exactly.
for investors. Okay, interesting.
Like I can give you guys an example. We had in Philadelphia, let's say on $100,000 property, your taxes are average on just vacant land. It's around $1,400 a year. So depending how big the piece of land is and what you can build on it, in the past we were able to get 10 tax abatements. So if I put, let's say, $1 million building on it, I'd only pay $1,400 of taxes for the next 10 years on the property.
Wow.
So that
So,
helps. So that helps you on your cash flow. That incentive is now no longer available, but they call it. You still get a 10-year tax payment, but it's like a step up program. So every year, your taxes go up a little bit, and on year 10, you're paying market value on your taxes.
yeah, I see. Yeah, because in Canada, especially places like Eastern Canada, the property taxes are very high
Exactly. Yeah.
because they try to make the revenue out of the existing properties when you have less properties. But if they have set target revenue to make, and from each properties, they try to charge higher as possible, right?
Yeah.
Yeah, that's what I'm seeing it. I know, especially compared to Toronto and other suburbs, Toronto property taxes are lower compared to the suburb properties. Yeah.
Absolutely. And
Yeah.
look, I think, when you look at taxation, I think with this black swan event, with COVID, I think, taxes are going to go up everywhere, but so soon. Not yet, but I think in the next couple of years, everybody's going to be in for a surprise.
Yeah, I think as a first step, interest rate has started to go up, and then the taxes would go up.
Exactly.
Yeah. Okay, so your top pick, so you've been investing in Philadelphia, and now you are looking into Florida. Florida, I know when it comes to Florida, people think about Miami and Orlando. So, for investment point of view, what are the cities in Florida more attractive? It is like Tampa or some other cities, or
So we were looking to stick around the Orlando region. So
uh,
we're looking at a project right now near Legoland. So it'll be like a short term and long term development. So in a community, so we're looking at something like that. I don't want to do too much short term, but it's something that we want to expand as a company, is start getting into the short term rentals, um, to create just more for ourselves and for our investors.
mm-hmm. Yeah, because your revenue could be higher at the same time, the expense would be high as well, right? Especially property management company, if they're going to charge 25% of their revenue, that's huge without putting any single dollar into the business, right?
Exactly, and that's why I'm actually have a meeting later on today, but we're actually thinking about possibly starting a management company for what we're working on, and then offering it to other Canadians at a discount price.
Yeah, that would be amazing because I remember I was trying to do a project in Costa Rica and they were saying, oh, for short term rental, we charge 25% of the revenue. Then I was thinking, wow, it's like you're not a business partner to charge that much money. Because we are used to 8% property management fees here in Canada for the longer term tenants. But short term, I don't know if it is 15-20% kind of reasonably okay. 25-30%, I would think that is at the higher end, right?
Exactly, yeah, and that's the one thing. Like, I think some of these property management company, when you look at what they're offering, they're not doing that much. They're just making sure the cleaners are going there 3 times a month. Instead of once every couple months, whatever your strategy is. I
Yeah,
think
yeah.
I think it's so, and everything's up for negotiation, but every time we've had conversation with people, it's always been that 25 to 30%, and take it or leave it. Nobody's flexible on that whatsoever.
Yeah, in that case, you might as well build your own team and then make that as a business and share that with the fellow Canadians or somebody who is interested in hiring, right?
Exactly.
Yeah. Okay, that's a great strategy. Good luck on that. And so probably I'll let one of our associate and or Jav, he's on the call, I guess, and as a young potential future investors, you may have any question for Matt about investing in US.
Well, yeah, let me think. Um, yeah, where would I get started as like a young professional in maybe syndicating on a partnership to invest in the U.S. for the first time?
So you got to be careful when you're syndicating deals in Canada, right? So if you're trying to syndicate, try to hang out with other like-minded people. Start off with a credit investor. That will make your life easier in terms of compliance.
Right.
But make sure that you guys understand the risks. There's the exchange risk, there's the tax structure, um, and go from there. But I would, at the end of the day, just make sure that when you're syndicating in Canada, that you're very careful of what you do and what you say. Don't advertise your deals on the internet or anything like that.
Right. Right.
Yeah, you need to partner with credible individuals so that they won't take advantage of you as a new investor, right? So they will try to handhold you and help you out, right? You need to find the right people, and that's crucially important. Yeah. Okay, I think it's a great discussion, Matt, and thank you for your time. And I think we will meet again in the coming weeks or months. And good luck on your projects in US, and we'll be in touch.
Perfect. Thank you so much for having me. Take care, guys.